Good evening and welcome to the Trading the Tech Show. My name is Derek and this is iLi Academy. Today is Tuesday, May 11th, 2021. It was a rough day in the market today, red across the screen. The Dow Jones was down 473.66 points to 34,269.16. So there's really no hope for the Dow today. It peaked early though. If we're going to say anything positive, that fall peaked kind of early. We dropped down through about the 11 o'clock hour. We were falling, pretty much hit our low before 11 o'clock. Looks like 34 110.45 was our low at about 10:47 a.m. We revisited that low again. We didn't quite break it. Well, we did break it actually at 11. We went down to 34 104, just kind of that same level. And then from there, we were higher for most of the day. But we closed at 34,269.16. And so the Bulls gave way and the Bears definitely took control today. The S&P 500 closed down 36.33 points to 4152.10. The Nasdaq closed down 12.43 to 13,389.43. And our Russell 2000 closed down 5.71 points to 2206.09. Now it's of note that our VIX is still rising. It's up another 2.18 points to 2184. We had talked about the VIX yesterday. Last week, we saw, I think it was Friday, we saw the VIX down at like 16.9 or so. Then we saw it slowly rise like through the 17s. And then yesterday, being a down day, also we saw it rise quite a bit. And so we kind of anticipated that the Dow Jones would fall today because the VIX was rising so strongly. And it's still rising, so I wouldn't be surprised tomorrow if we have another sell-off. So it remains to be seen. Typically, when we get a decent size sell-off for the day, used to be that 400 points or so was a huge sell-off in the market, but now that we've hit, we're above 30,000 now, so it's a much lesser percentage. Yesterday's fall was only 1.36% of the market. So it's big, but it's not as big as what it could be. So it's not the end of the world. So typically when we see a fall like this, investors tend to look around for some cheap options to buy, and not options as in, not options as the actual security options, but I'm saying cheap options as far as stocks. What things are out there are cheap for us to buy? They're looking around for those bargains, and they tend to kind of buy the next day because they realize the market sold off a lot, and then they're thinking, even looking at this chart here, they're looking at it saying, oh, okay, we were not really willing to go past that 400, 500 point mark. And most of the day we were kind of trailing off to the right. So maybe there's some bargains out there that we can buy, and the next day turns out to be an up day. So it really remains to be seen how traders and investors look at this tomorrow. They may say, hey, there's some definite opportunities out there for us. So we'll have to watch and see tomorrow morning what we look like on the open. But let's take a look here. Let's take a look and see how this might have affected some of our Forex operations, and Forex opportunities that we have as far as trades. So we're looking at the Aussie CAD right now. Right now, the Aussie CAD is in a full mature trend because all the moving averages are in order to the downside here. Getting a little bit of an angle to the downside. It's a little bit of a sharp angle. This sharp angle a little bit away, from where we currently were, or we were just previously, to where we currently are is kind of a sharp angle. You can see those moving averages really bending over and starting to push a little bit to the downside. So this may exhaust at some point in time and then pull back. Now this currently where we are could be used as a pullback trade to the 50, because once we get a few pretty decent sized candles here, and then we start to kind of wane from that strength to the downside, we tend to trade back towards the 50. So this might be an opportunity for us to buy back into the 50. If you look, this was an area of support previously yesterday, twice at the end of the day, on Monday, and then beginning of the day on Tuesday. And Tuesday, kind of about a quarter of a way, a little more than a quarter of a way through the day, we kind of hit that same level again, kind of where we are now. So we're testing this area again. We've kind of broken through it. So there might be some more downside here. So if we're looking at this, we don't want to, we're kind of going to pick the bottom on it if we're going to do that snapback trade. But what we kind of want to see is maybe a green candle develop here. Let it show us a green candle, and then maybe we'll look at a place where we can get in a little higher. And if the market really moves back and snaps back towards that 50, we might be able to grab some pips that way. So looking at yesterday's trading here, we traded here pretty close to our 200. Well, we did touch the 200, just slid through just a little bit around midday. And then we could have shorted here on the 100 or on the 50, and that would have provided an opportunity for us to be profitable right now. As far as the Aussie yen goes, we're trading above our 720 here. All the moving averages are above that 720, so we're buyers here. We're going to be buyers on this 200 or on this 100 or 50, which are up a little bit higher around this 85.20 mark. If the 200 is too close for comfort for us here, sitting around 85.09, we can go up about 10 pips higher than that, 10, 11 pips higher, and drop our order in on one of those moving averages. And our expectation is that we will return to a move to the upside because that's the preferred direction. As far as the Aussie New Zealand goes, we're trading here above our 720. All the moving averages now are above the 720. We see that the 200 in early trading this trading session, the 200 has jumped above our 720 now. It's not convincing, but it's above. So now we're buyers here. So we don't have an opportunity to buy just yet, even though rate is sitting right here on this 50. We don't want to jump in here and place that order because it's going to be like placing a market order. We want to get this to set up, let this set up just a little bit more, get some more width between, between the moving averages, and let's see kind of how that turns out. Sorry about that, I had to sneeze. So we're going to wait on that Aussie New Zealand right now. But in all, we are buyers here. We're getting a little consolidation, a little bit of trading off to the right. There's pretty much a little bit of a tight range going on here right now. So if we drop down too low, below our 100 here, then we might look at placing an order on that on the 50. If we drop down here closer to the 200 like we did in early trade today, then we can drop an order on this 100 to buy. And that's been pretty much the place where we've been bouncing. If you look all the way through yesterday, this 720 was acting as a support for us, and we bounced each time we went there. So there's a strong possibility that we would bounce again when we get to that level. As far as the Aussie US goes, we're trading above our 720. Right now, all the moving averages are above the 720. Rate is just below our 200. So we have the opportunity to buy here on the 100, as that's our first opportunity at 78.34. The 50 is not too far behind that at 78.36. There's only a 2 pip difference. So I would use this 100 personally if I was going to place a trade there to buy. If it drops deeper past this 200, then we can improve that order to the 200. But upside is our preferred direction. As far as the CAD yen goes, we're trading here to the upside because we're above our 720. All our moving averages are above the 720 as well. We've got our 21 just meeting the 50 right now, so we're not quite in the mature trend, but we're creating trend to the upside. Once the 21 jumps over the 50, that might indicate that we are in a full mature trend. And so we'd be buyers on pullbacks past our 50 and past our 100 moving average. As far as the Swiss yen goes, we're trading now down here above our 720, but we're trading below our 200 moving average. So we might want to drop an order on that 200 if that's too close for comfort. We do have the 50 sitting here at 120.39 that we can buy at that level, or at the 100, which is 120.45. All right, so so our preferred directions to the upside here, we did pull down here, pull out here, pull back here to the 200 and beyond the 200. So we have an opportunity to buy there on the Swiss yen. And recently, the Swiss yen and the yen pairs actually have been moving up because risk is on. As far as Euro Aussie goes, we're trading right now right on top of our 720. But we're just a little bit above it as far as the ask price goes. The bid is sitting right on top of the 720. All the moving averages, however, are to the downside. So we are sellers here. We're not buyers here. Our 200 is our first location to sell. That's sitting right here, right around where the 21 is sitting to. They're both sitting at the 155.03 area. That would be our first option for to enter a sell stop trade. As far as the Euro CAD goes, we are trading here below the 720. So when I zoom out, you can see that 720 is way up top. There's a lot of real estate between the 720 and the 200. And when we zoom in, we can see that yesterday we were trading up here above this 200. So we were high enough above it where we could have dropped in order to sell on the 200. If not, we could have sold on the 100 or the 50. Either one of those would have yielded a profitable trade for us. All three of those would have been good trades. So now we're just waiting for pullbacks past the 50 or past the 100. Here's our Euro Swiss. We're trading below our 720 here. All of our moving averages are below the 720, but especially the long-term moving averages, they're a good distance away from our 720. So our preferred direction is still to the downside. Our first option to trade is going to be here on the 50, which is going to be the 109.68 level. All right. So we can trade there, or if we want to be more conservative, we can trade on the 200 or the 100. But with the difference between the 50 and the 720, I don't see why we'd want to be much more conservative than that at this point in time, because we'd be committing to a move more towards the downside, which is our preferred direction. And by the time we hit that 50, it's a decent amount of pips to the downside from where it is now. Now, as far as the euro pound goes, we're trading below our 720 here. All the moving averages are below the 720. We were in order, so we did have mature trend at the start of the day. The 8s just climbed over the 21 just now, but that's okay. We're pulling back towards the 50. We did touch it in early trading, just about within the last hour or so. We've touched this 720. I mean, touched the 50. So we're going to see if this green candle starts to spur a pushback past the 50, where we can drop in order into sell stop there. We could see yesterday we did trade for a short time above that 50. Early in the move above the 50, we may have been able to drop an order in, but the other ones were really, really close to the 50. So I don't know if we would have been able to squeeze an order in there, but if we did, we'd be profitable on those trades. As far as the euro yen goes, we're trading above our 720 here. All the moving averages are above the 720. We did trade yesterday down past our 200. So we had the opportunity to buy on the 200 here, and that trade would have been profitable. If we bought on the 50 or the 100, we'd still be kind of, trying to get profitable on those trades. But with the distance between the 200 and the 720, our upside potential is a lot greater than our downside potential here. So our preferred direction is to the upside. As far as the Euro New Zealand goes, we're trading now right above our 720. All the moving averages are below the 720. So, but we are sellers because our long-term moving averages, 50 and our 200 and our 100, are all below the 720, right? And so we're going to be watching to see what happens here, but we're not going to be buyers here just because the rate jumped above the 720. We're looking at the overall direction, which is preferred direction to the downside here. Now we did draw in at this 1.6664 mark. Yesterday, we did draw in this support that was set up. We see after, after Monday's trading, we did actually end up jumping up above and start creating some movement to the upside here. We started to create just a little bit of an angle for our lows here. Right, just roughly, that's kind of like the action that we were getting. By no means is a perfect trend line or anything like that. It's just to show you, okay, this is the direction that we were seeing the lows. This is kind of where we were and what was happening. And so we traded below that. We did push below that in early trading today, but we rebounded right back above it and found some support there as well. And we've been kind of climbing here. So our penchant is kind of to the upside right now as far as what we see in the movement of the chart of the candlesticks themselves. However, we're not blind to the fact that our our moving averages long term are below the 720. So this move to the upside may not be sustained, right? So we'll have to watch that. As far as the Euro US goes, we're trading above our 720. All of our moving averages are above that 720 here. Lots of real estate between the 200 and the 720. So our pension is to the upside, our definite preferred directions to the upside. We're trading now well below our 100. So we may be able to sneak an order in there at the 121.42 level. If that's too close for comfort for you, you can use our 50 as well at the 121.48 mark. And the rate would definitely have to commit to that level before passing above that level. And it may go up here and check this level, which has been our level of resistance. We can see that up here, throw the crosshair on it. We can see that we've had this level of resistance in this 121.70 area. We've passed through it a couple of times, but in general, that's kind of the area where the resistance was. So when we get up to that level, if we get in at this 148 and we get to that 121.70s area, we definitely want to break the trade even, grab our pips, add some pips to it, and then let that trade run. As far as the pound Aussie goes, we're trading above our 720. All the moving averages are in order, so we have a mature trend to the upside, and we're just waiting on pullbacks towards our 50 or towards our 100 in order to place buy stops on those levels. Here's our pound CAD. Our pound CAD is trading below our 720 here. So we've got all the moving averages below the 720. So we're sellers at this point in time based on the signature effect strategy. So we're going to be sellers. If we trade a little bit higher than this 50, we can drop an order on the 50, or more conservatively now, it looks like we'd have to place our order on this 100 or on the 200. Okay. But our preferred directions to the downside, we've got a lot of distance between our 200 and our 100 and the 720. There's a lot of distance there, so we don't have any real thoughts of that changing direction to the upside just yet. We've had this nice pushback to the upside here against the overall move or the overall trend, but that's providing opportunity for us when this exhausts. Our long-term moving averages are still below the 720, so our preferred direction doesn't change here. As far as the pound Swiss goes, we're trading above our 720. All the moving averages are in order above the 720 now. The 200 has jumped over the 720 in early trading today. So this has changed our direction. Yesterday, we didn't have that. Yesterday, the 200 was still below the 720, but rate was way above the 720. So it did drag the moving average up above the 720. So now our perspective has changed. Now we can be buyers here. So we're going to be buyers when we pull back past our 50 or past our 100, because this move, it's been a couple of days in the making here. It's probably going to exhaust at some point. It doesn't go in a straight line. It's going to exhaust and pull back. And when it does, it's going to give us opportunities to buy. As far as the pound yen goes, we're trading above our 720 here. All the moving averages are above the 720. The 8's kind of sitting on the 21, but it's above it. So we can say it's a mature trend. We got a little bit of a ceiling kind of going on here right now. So it is pulling back. It did pull back yesterday all the way to the 100. So we could have dropped an order on this 50 to buy. That would have been a profitable trade for us. And right now it'd still be profitable for us. Not a huge amount, but it would still be profitable. So we're going to be waiting for any more pullbacks past our 50 or past our 100 to place our buy stops. Now, as far as the pound US goes, we're trading above our 720. All the moving averages are above the 720. Lots of spacing between them as this trends higher. We're pulling back now. We pulled back past our 50. So that's going to be the place where we have opportunity to buy at this point, which is at the 141.31 area. If we pull back past this 100, we can improve that order as long as it's not executed. Here's our CAD, a New Zealand CAD. We're trading here below our 720. All the moving averages are in order to the downside here. That's mature trend to the downside. We're waiting on pullbacks past our 50 or past our 100, kind of like what we got yesterday. We pulled back here even past the 200. So we could have dropped an order at least on the 100 or the 50 and shorted at those levels, and we would have a profitable trade even right now. As far as the New Zealand Swiss goes, we're trading here on the 720. We're trading below the 720 anyway, but we've been running up to this 720 and finding some resistance there. Even though we've kind of pushed through, we've still actually returned back below the 720 each time. So we can short on our maybe our 100 or our 200 or our 50, which are all below that 720. So we'll be mindful because we kind of have been having this resistance kind of going on. I'm going to grab my crosshair here and just draw a line here. If you look above that particular white line here, just like scrolling across, we've slipped through this line a little bit to the downside, but most of the trading has occurred above that line, right? So that's sitting at about, we'll call it 65.50. We'll say 65.50 because that's a nice round number, right? So 65.50 sitting right around where the crosshair is sitting right now. So we can see that we've been bouncing in that area, even though we've pushed through. So be mindful of that as well. So if we short on those levels, that the 50, the 21, I mean the 50, the 100 or the 200 level, just know that when we hit that 65.50 area, we want to be breaking that trade even and make sure we take some pips off the table in case it bounces. Now, as far as the New Zealand yen goes, we're trading above our 720 here. All the moving averages are above the 720. They're not in order, but we do have opportunities to buy on the 200, the 50, or the 100 here. Okay. As far as the New Zealand US goes, we're trading above our 720. All the moving averages are above the 720 here. Right now, rates below our 200, but we can buy here on our 100 or on our 50 sitting at 72.60s or so. Okay. As far as the US dollar CAD goes, we're trading below our 720. All the moving averages are well below the 720. There's a lot of real estate between the 720 and the 200. We're not going to be trading really to the upside or trending at least to the upside. That's not going to be preferred direction anytime soon. So we're looking for pullbacks past our 50, past our 100. We're sitting right on the 100 right now. So our opportunity to sell is here on the 50, where the 21 and the 50 are kind of sitting in the same place at 120.99. That's going to be our short location. Now we are seeing some support here as well. If I put my crosshair on it here, right around this 120.82 mark or so. So I'd probably call it like 120.83, 120.85. I'd be watching at that point in time because if we short here, maybe on this 120.99 area, once we get to about 85 or so, I would be wanting to break that even and tighten it up so that you don't lose all those pips when it pulls back. If it breaks through, great. If not, it's going to pull back and you just want to take your pips off the table. As far as the US dollar Swiss goes, we're trading here below our 720. All the moving averages are below the 720 as well. Right now, rates jumped up even above our 200, so we're going to be watching that. We can maybe short at this 90.43 level as far as the 200 goes, or we can short at the 50 and the 100 level. That's sitting at 90.27. But since it's above the 200, I'd be watching that. If we drop an order here, we can drop an order here initially on the 100 to sell a sell stop there, but then we can improve this to the 200 when we feel comfortable to do that. As far as the US dollar yen goes, we're trading below our 720. All the moving averages are below the 720 right now. Our 200 jumped below the 720 yesterday. When we were doing our show yesterday, we were above, so we had to kind of hang on, but it was within our 10 pip minimum range, for us to place an order. So we didn't place a buy order here. We weren't going to place a buy order on that 200. It's within the 10 pips, so we weren't interested there. We're just waiting to see what happens here and recognizing direction. Now, at the last part of trading yesterday, the 200 traded below the 720, so that's changed our perspective. Now our preferred directions to the downside, and our 100 is going to be the place where we can place an order right now, sitting at the 108.76 mark. So that's the first place we can place it, because right now we're sitting right on top of our ask price is sitting right on top of the 200 right now. So that's going to be our opportunity to short. So I hope that you found some opportunities here. Tonight we found a few trades that have set up for us. We have some other things that are looking pretty nice for us as well. So we can place those orders and stay on top of our charts and find these opportunities, because they're going to pay us. It's Tuesday, so we're headed into our hump day. The first half of the week is almost done, but yeah, we're definitely going to be able to capitalize this week. No matter what the Dow does, we're still going to be able to capitalize, and that's a good thing. There's a lot of people are in the stock market and they only can buy. That's the difference with forex, is you can buy and sell just depending on what's happening, and it's not a real big deal for us. But for the stock market, it's a lot different. To sell, you're really reliant on buys, and so you really only have one direction you can make money in, unless you are a more sophisticated trader who understands short selling and has the margin ability to do that. So but in forex, you don't have to go through all of that. You can place trades in any direction you wish. So I thank you for your time, your patience. Once again, this is Derek with iLi Academy, and you've been tuned in to the Trading the Tech Show. Have a great one. We'll talk to you soon. Bye bye.